So you can start, sir. Yeah.
Okay. Just a moment. All right. Thanks for tuning in, first of all. And we will start now. Firstly, a disclaimer. Okay, so whatever we'll be covering in this webinar should not be construed as an investment advice. Okay, you are expected to do your own due diligence and research. Okay, with that out of the way. So I'll first of all tell you what this webinar will be and what it will not be. Okay, Bitcoin is a fairly complex topic. So this webinar will be primarily Bitcoin 101. Okay, for want of time, and also because the subject matter is technical, we'll keep it fairly inclusive. Okay, without compromising on the key takeaways. Okay, so let me first give you a framework for how we'll go about doing it. So you want to understand what a car is. So there are different levels of knowing it. At the first level, we can understand that it's an instrument of mobility, and it can take a person from point A to point B while consuming fuel in the form of petrol or diesel or electric or whatever. At the second level, we can really go deep inside and figure out how the internal combustion engine works and so on and so forth. At another level, we can learn how to drive a car. Okay, and to learn how to drive a car, you don't necessarily need to understand the intricacies of how the car works. Okay, which would be the engineer's perspective. And finally, you don't even need to know how to drive a car. If you have an Uber app, you can press a button and then get to use the car or get the benefits of what a car provides without having to know how the thermodynamics works in a car, and also without knowing how to drive a car. So we will take a similar perspective in this webinar. Okay, so we will spend a lot of time covering what is Bitcoin, the origin story and philosophy, and because this is really important. Okay, what exactly is the problem that Bitcoin is trying to solve, and how Bitcoin solves this, the implementation will go light on that, and how to use the Bitcoin network. We'll completely skip that; it's not required. And we will spend a lot of time figuring out how to buy Bitcoin, how to store Bitcoin, so that you don't lose it, and how to profit from it. Okay, so to use the previous analogy, we'll know what a car is, and we'll figure out how to say order a car using a Uber. Likewise, we'll figure out what is Bitcoin, why it's important, why we should know about it, and how can we buy and hold and sell and generally be more prosperous with this new technology. Okay, and for those of you who are really interested, there are a lot of excellent resources about how Bitcoin works, how to use the Bitcoin network, and so on and so forth. I'll share some of these resources in the later part of the webinar. Okay, and I'll keep it interactive depending on the context. And if there are any other questions, I will have a Q&A session at the end of the webinar. This whole thing may take around 45 minutes, and the last 15 minutes we can have it for Q&A. All right. Okay. So first, some context. Okay. Can someone tell me what is the problem that Bitcoin is trying to solve? Because that's a crux of the whole thing, correct? And if we can, all of us can understand and agree on that at the end of the webinar, there would be a massive takeaway. What exactly is the problem that Bitcoin is solving or attempting to solve? You can just speak or type in the chat. It's okay if the answer is not correct, but please feel free to participate.
So it's trying to avoid the double spending problem in financial transactions, sir.
We don't have it right now. Okay. So right now we don't have a double spending problem in finance. So that is not the thing. Variation in currency evaluation across countries, not really. Decentralized currency, okay, but why should we decentralize it? No sovereign control. That's closest to what really is by Venkatesh Suryanarayana. Make every transaction traceable and transparent. Not really. Okay, even though that happens, that is not the main purpose behind it. The implementation may result in that, avoid commissions. Yes, we eliminate third party and reduce commission. So that's a big thing. But again, that is not the central thing. Okay, that is this all happens. I mean, today it's extremely cheap to transfer value via the Bitcoin network, and a fraction of what it would cost via any of the big money transfer payment systems in the world. But that is not the central idea. Again, reverse transactions, if not trusted, that's a function of implementation. But exactly, see, these are all obviously called symptoms. Right? Fundamentally, what's the issue? What is the big picture? It's trying to provide a global currency which is not from a single country. Correct, right? Piyush Gupta says that, but why do we need this? Why is that a problem? All these years, we have been having different countries issuing different currencies. Why now Bitcoin? Common currency across global, why do we need that? Control inflation of your investment, that's actually correct by Rajesh Kannan. Global currency that is not under the control of banks, that again is correct. But why do we want a global currency that is not under the control of banks? Yes, to allow people unknown to each other to establish trust without a central controlling agency. That's what Bitcoin is. But what is the problem that it's solving? Okay, to avoid manipulation, can someone explain clearly? Who is manipulating what? Digital asset owning. Bitcoin is a digital asset, but the innovation is not to get people to invest in a digital asset per se. Okay, so this is the big picture, guys. So if in the next 15 minutes we can get a clear answer to this, then country issuing currency underwrites the currency. Okay, correct. So now what exactly is the problem? Piyush Gupta says, yeah, to avoid dominance. Dominance of who? How?
So country, whoever is issuing the currency, the credibility of currency depend upon the country. It goes hand in hand with the country's financial credibility. So if country's financial credibility goes down, the currency values will also go down significantly. So it's kind of a big risk, which is going if we go with one.
So okay, if that is the argument, we are Indians. RBI is issuing the currency now. Should we be worried? Should we be concerned? Should we invest in Bitcoin? Is RBI credible?
The point is that to avoid dominance is in worldwide, the exchange is in terms of dollar. So it will have a big impact on your transaction and the affordability and stuff like that. So whereas Bitcoin plays it's common across, and we don't have the dominance, but better with better, it is efficient. Is what that's trying to establish right now. That's what I think.
Can you be more precise? Is it legal in India? Yes. I mean, it's look. India doesn't have a clear stance on this. Okay.
Not yet.
Yeah, not yet. So that's the answer. To prevent fiat currency by limiting mining. Okay, so all of these answers are somewhat close to, it's somewhat close, but not very precise. Okay, so so this has to be the central takeaway before you even understand what Bitcoin technology is all about, right? Conceptual, philosophical idea behind this. So now we'll take a detour. Next 10 minutes, we're not even going to talk about Bitcoin. Okay, we're going to talk about world as it is and the problems that are in today's financial world, and the reason why Bitcoin came into being. Okay, power to common people, yes, but how? Yeah, so that's correct, right? So power to Bitcoin is people's money, right? And but first of all, why do we need people's money, right? So we'll now take a detour for next 10 minutes. It's not about Bitcoin, and then we'll circle back to Bitcoin. In fact, that's a much more a much better way to understand the value proposition of Bitcoin. All right. Okay. So who can tell me what senior age is? Has anybody heard of this phrase, senior age? So I'm going to set the context, right? The financial context, right? So we're not talking about Bitcoin here. What is senior age?
It's the right of a country to issue currency.
No, not exactly that. But feel free to come with answers. So we'll keep it interactive. Any other answers? Okay, so to put it bluntly, senior age is theft by government. Okay, so however, if you Google for it, that's not the exact words that you would get. Okay, let me explain. So during the Roman Empire, the currency was called denarius, and the Roman government used to issue denarius, and initially it was all silver, 100% silver. Okay, so the government would give this money to soldiers and other people in return for services. Okay, people put in effort, and in return they need something of value, right? And at that point in time, silver was used in coinage. So Roman denarius had 100% silver. Now, if you see the chart, right, 64, 68 AD, almost close to 100% silver content. And by 268 AD, almost close to 0% silver content. They used to slowly mix it with bronze, okay, 1%, 2%, so people would not notice. Okay, initially it used to be 95% silver, 5% bronze, or some other metal, and then 94%, 93%, slowly. This is theft. Okay, and initially people don't notice. People don't expect government to do that, right? So why do the governments do that? Because government wants to spend more, right? They can only spend the money that they have, right? Therefore, if they engage in wars, they have to fund these wars, or any other programmer. The Roman government wants to undertake some projects, or whatever may be the reason, they want to spend more than what they have, right? What are the different ways of doing it? One way is to increase taxes, but it's very unpopular. Okay, beyond a point, people, even the tax donkeys may revolt, right, if the tax goes beyond a particular point in time. So this is a sophisticated form of theft. Okay, so with the same amount of silver, they are able to issue more coins because they are tampering with the silver content of the coin. Okay, initially they agreed with people that it's going to be 100%, right? And people continue to believe that, and slowly, and you could actually trace the decline of the Roman Empire with the decline of the silver content in Roman denarius. In the end, basically the currency is worthless, right? No silver content, nothing, right? Chumma, they're creating something, right? And this is senior age for you. This senior age in history, okay? But we don't have to go that far back in time to understand what governments are capable of. This is a Weimar Republic, Germany. After World War I, Germany got saddled with a lot of debt. They had to pay it back. So at another point in time, for a short period of time, it was actually a republic, Germany, right? The Kaiser, the king, got thrown out. It became a republic. And as you can see, this is German marks needed to buy 1 ounce, and they kept on printing, right? Marks. Slowly at first, you can see it's January, September. The initial prints are there's a difference between January and September. And then towards the end, you can see it's every day, October 2, October 9, October 16. You can see the amount of marks required to buy 1 ounce of gold kept on increasing, right? This is hyperinflation in Germany. and then the German economy collapsed, and this is what gave rise to the rise of Hitler. The people are so annoyed, pissed off, that they're willing to go with an authoritarian guy who promised solutions. Okay, now imagine, right? Let's say you are having, so you are a hardworking citizen, you are having your money in marks, and this rapid, untethered, unconstrained printing of money devalues what you already have, right? At this point in time, I mean, it doesn't really matter. You might have saved 1 million marks earlier this year, but it's become worthless. In recent times, you see what's happening in Venezuela, you see what's happening in Zimbabwe. It's all the same. So time and again, governments the world over, they may not be good in a lot of things, but they are very good in one thing, and it's seniorage. Okay, and what does it mean for us? The money that we have, the currency that we have, loses money over time, right? And we don't even think about it. We're not even surprised that that's happening. We take it for granted. That's a natural thing, and yet that need not be the case. Like, for example, to put things in perspective, when I graduated from IMB, the average salary of the graduating class was 2 times the total fees. Okay, that's not the case now, I guess, right? The fee is like 25 lakhs or something like that, plus mess fee and all that, and I don't think the average salaries are that high, right? Probably it's now come to the total investment is maybe 1 year's 1 year's salary. Back then it was 2 years salary, right? And not only that, today when these guys graduate, they get pushed to the highest tax bracket. They're actually a bigger tax donkey than what we were back then. So the long and short of is that money is not going far these days. And whatever we save, whatever we accumulate, because we work hard and then we get some money in return. And we expect the government to be very careful with printing money so that the value remains intact, right? If this is printed in an unprinted manner, then whatever we have, there's so much more of it, therefore it loses purchasing power. Okay, so this is a real problem. And if you look at this chart, this is the G4, not G4, I mean top 5 central bank balance sheets cumulative. That's the Swiss National Bank, Bank of England, the Federal Reserve, Bank of Japan, and the European Central Bank. Given that this current monetary system that we have here came into being after World War II, from 1944 to 1999, that's almost 55 years. All these balance sheets put together is only 2 trillion. Okay, and then we had this big spike because of the great financial crisis in 2008, and that at that time it was considered ridiculous, right? That a very irresponsible thing to do. And this is when Bitcoin came into being, as we will see, right? Now, you look back and see that this doesn't even register the kind of spikes we are seeing in central bank balance sheets, like 24 trillion now, right? Now, if I stretch back this, there's almost this will flatline at this point on the left-hand side. So we are seeing it's getting worse and worse. Okay. Now, all this results in inflation. Okay. Now, you may say that government is saying inflation is 4%, 5%. That's these numbers are doctored. Yes. Yeah. So, there's a website called Shadow Stats. If any of you are signing in from the US, Shadow Stats measures US inflation as it should be measured, because that was how they were measuring inflation in the 70s. Going by that, it's now 15% in the US, not 5% as they claim. India, I think it's very straightforward. If you actually measure inflation, it's easily around 10%. You take healthcare, you take education, you take fuel, whatever, right? Forget what the government says, right? You do it for yourself, think for yourself, right? So if money is inflating at 10%, right? And in a risk-free rate, we keep in bank, we are getting 5%. And on that interest income also, we are getting taxed. So basically, whatever wealth we are having is reducing by 6% every year. And that's a reality, right? This is the problem. Another chart, direct correlation between central bank balance sheet expansion and S&P 500. Okay, if the central banks stop expanding their balance sheet, this one comes straight down, straightforward, right? This is from 2009 onwards. Okay, so this is the racket that's happening. Same thing, US house prices versus the total margin debt, direct correlation between central bank pumping money and the house prices. Okay, let's look at the price of gold. In 1970, before 1971, after World War II, we had a Bretton Woods agreement where US dollar was pegged to 35, pegged to gold at a price of $35 per ounce, and foreign central banks and foreign lenders could, in principle, convert their dollars to gold at $35 per ounce. In 1971, we had the Nixon shock. US unilaterally closed the gold window, and after that, gold took off. Can you imagine? $35 per ounce in 1971. In 1980, it was close to $850. Today, it's around $1,800. Right. So gold is not going up. It's the US dollars that's coming down because of excessive printing. Right. It's the same gold. Right. So it's taking more and more money to buy that same thing, the gold. Right. And the gold is now suppressed today. Gold and silver, otherwise it would have been $10,000 per ounce, which means that something that was $35 per ounce in 1971 would be 10,000. So that's the amount of money printing that's happening. So this is causing inflation in various assets. For people, those of us who are lucky to be owning assets, how real estate and stuff like that, stock market and so on, we are beneficiaries of that. Okay, but people who are starting their career now, are people who don't have their accumulated wealth, and people who don't have exposure to this kind of financial assets which are inflating, they are in a big trouble now, right? So this is the state of the world. This is the purchasing power of US dollar from 1913 to 2019. It's almost close to zero. Okay, so it's like some 5% or something like that. What used to be 100, right? And the US dollar is the reserve currency of the world, correct? It's the number one currency in the world, and this is the fate of the reserve currency. Okay, so this is the context. Okay, to cut a long story short, due to we are off the gold standard from 1971 onwards. Okay. From 1944 to 1971, we were on gold standard. US dollar was on gold standard, and all other currencies were pegged to US dollar. Okay, and US was engaging in Vietnam War, Cold War, military, and all kinds of spending, and they couldn't honor the commitment. So there was actually a default. So US unilaterally, temporarily closed the gold window, and it still remains closed. After 50 years, right? It's what was temporary is now permanent, right? And this is the fate of all currencies, whether you are in INR or Euro or Sterling or whatever it is. Governments are irresponsible, and so we think we have a lot of money, right? But actually, the purchasing power of these shrinks, and that affects the common man, right? Not necessarily people at the top, as we will see. So who can tell me what Cantillon effect is? Has anybody heard the phrase Cantillon effect? It's an economics term. So Cantillon effect simply means that money, when central bank creates money and pumps it through their plumbing channels, it affects this distribution affects different asset prices a different manner. Let me explain. Correct. For example, the US had this big bailouts post-COVID. Now, except for that, those stimulus checks that ended up with people, $1,200 or whatever, the big chunk of money, the trillions of dollars, right? So these are pushed through the financial systems, right? The banks and so on and so forth at very low interest rate or next to nothing interest rate. And people like BlackRock, they get the private equity. All these guys get substantial amounts of money at very low or next to nothing interest rates, and they go and buy up the assets. They are people at the top of the food chain, right? They buy up the house prices, they buy up a stock market, all these things start go up. And ultimately, slowly it trickles down to the common man on the street, right? People like you and me. And when we get the money, we feel rich, we go to buy, but we find that the asset prices are already inflated, right? Because these guys already bought it, waiting to sell to us. Okay, so this is the Cantillon effect, right? So everybody does not benefit equally via the trickle down. The people at the bottom actually get shafted. And this has been happening over and over again. Wall Street is always rich. They socialize the losses. They are capitalists when it comes to profit. When they make losses, it's socialized. Government foots the bill, which means there's you and me foot the bill. Okay. So this is the financial environment which resulted in Satoshi Nakamoto creating Bitcoin. In fact, this is a Genesis block, the first block of Bitcoin blockchain, wherein Satoshi encoded this one, 3rd January 2009, the Times. So basically, it's a UK newspaper. The British Chancellor, the Chancellor on brink of second bailout for banks, right? So it's already embedded. So basically, pissing off when you have this bailout kind of thing, it's extremely unfair because the world is very capitalistic for people at the bottom of the food chain and very socialistic for people at the top of the food chain. It's just 5 or 6 guys sitting and deciding, playing God and deciding who should survive and who should die. This is the Bitcoin origin. So in a sense, right, now what is Bitcoin? Bitcoin is basically hard money you can't fuck with. Hard money is money that's not printed out of thin air. For 5,000 years, it's been gold and silver that has remained as hard money. Gold has retained its purchasing power over thousands of years. 2,000 years back, 1 ounce of gold can get you a very high quality suit, and it remains the same today. Okay, and this is gold retaining its purchasing power thousands of years. Can you imagine, right? Now, Bitcoin is a even more efficient form of money, right? It's hard money like gold and silver. And it can't be manufactured out of thin air. It's a very constrained supply. This is what it is. What that means is that when we store our fruits of our labor, which is the money that we have, where we work and we get money, that's the fruits of our labor. And instead of consuming, we are keeping it so that we can use it later on, right? If you store in the form of Bitcoin, then it retains its purchasing power. Okay, so life stops being a treadmill. That is the big idea. If there's only one takeaway any of you want to get from this thing, it's this one, right? If you get that, I think I'd be happy. So there's just some cartoon, right? Elon Musk still, despite running so many companies, he has time for this kind of tweets. So we'll now just take a very short break now, and if there are any questions I can answer regarding whatever I covered now, or else we'll move on.
Venkatesh, one question I had. So when we mention about Bitcoin being similar asset as gold, a lot of people pitch this as a digital gold. I have an issue in terms of gold never has seen this kind of a volatility. So at worst, at any given point of time, from day to day, the gold price will vary a few percentage points here and there. You won't see gold value declining by 30%, 40% in 6 months of time.
Correct.
Because if asset valuation is fluctuating aggressively, then the trust or the confidence of borrower and lender will also not be there, because you don't know how to hedge against those fluctuations. So how does Bitcoin assure the people that those fluctuation, in maybe because all the euphoria and everything right now, but they either plan to handle that fluctuation to ensure that it becomes part and parcel of the assets being traded like gold or US dollars or other currencies?
Yes. Okay. Yes, I will answer this. All right. See, Bitcoin technology is now what, 12 years, 13 years old, right? Gold's been 5,000 years old, right? And Bitcoin is monetizing even as we speak, right? It's a new idea. If you ignore the day-to-day volatility and just look at the year-end, if you look at the asset price, Bitcoin price once a year, okay, it's mostly been on up and away, okay. Ever since Bitcoin came into being, it's been the best performing asset by far, okay, and this is over 13 years, okay. So I would envisage Bitcoin as it gets more and more mainstream adoption, the volatility would come down, okay. I think it's still a fantastic store of value because if you look at it year after year, right, instead of looking at it day by day, it's the trend is clearly up, right? And there are only 21 million Bitcoins ever, right? And there are at least 50 million dollar millionaires, including the billionaires, tech billionaires, and so on. So I think there isn't as more and more people get Bitcoin or get exposure to Bitcoin, the volatility would come down. It would come down, right? I would anticipate that. But let's say you buy a house, right? You're not looking at the price of the house every day, right? Right? Or even a stock market portfolio, right? I mean, if you're an investor, I do understand that volatility is a challenge, but I would say that it's less volatile than before, and it'll increasingly get less and less volatile. Okay. Yeah. So there's one more question. So Bitcoin cannot be demonetized, right? Right. Look, I heard stories about some squid currency that suddenly went bust and all its investors lost money. Yes, that's correct. See, this is a serious technological innovation. If people know who Satoshi Nakamoto is, then I think it's only a matter of time before they give him a Nobel Prize in economics and a Turing Prize, which is a Nobel Prize equivalent in computer science, right? With any big innovation, enough scamsters come around because most people don't want to spend time or effort understanding it. There are a lot of scam coins around, but Bitcoin is singular. Okay, it is very different from. That's why this is about Bitcoin and not about cryptocurrencies. Okay, so Bitcoin cannot be demonetized. So Biswajit Roy, yeah, I see a hand. Yeah, you can.
Hi, Venkatesh. Good afternoon. If you can give some light about the regulatory perspective worldwide, okay, but if you look at the Bitcoin perspective, only 2% of the world populations might be using it. Okay, so how the future, how the all the government are going to accept it, and what could be their stance in terms of accepting Bitcoin, the regulatory AML? If you can put some ideas.
Look. Basically, Bitcoin rattles governments, correct? Because it's against their profligacy. There was a point in time where, in Europe at least, the church and the state were very closely interlinked, and at some point in time, this was severed. The link between church and the state got severed, right? I think it's a matter of time before the link between government and money would be severed. I think government should build roads, protect the borders, enforce contracts, so on and so forth. They need not be into all this, unbridled printing of money kind of business. I mean, it's not required. I mean, they could have in the past, they could have been, I mean, as long as society and government countries were under gold standard, there's enormous prosperity. There was a price stability. The standard of living of people got better and better, right? Now, this current regime has to go, right? It's only a matter of time. I mean, there's a limit to how much of debt global economy can have, because these debt have to be serviced, right? We are having interest rate at 0.1%, 1% or whatever. If they go to 5% or if the interest rates normalize, right, these countries would be bankrupt. They can't pay, they can't even service the debt, forget the principal, correct? So they are repressing the interest rate globally. Now, when they repress the interest rates, the savers are getting shafted, correct? So I'm now 50. So people like us soon will be retiring. We're living off our own money, and we would need that money to, we want to live off that interest income of the capital, right? And if we keep it at extremely low rates, then people are forced to take risks. So these are all very unnatural kind of things. But just to put things in perspective, El Salvador, okay, tiny country, Bitcoin is now legal tender there. The central bank itself buys Bitcoin. Okay. Now, Bitcoin is a legal tender there. You could even use Bitcoin to pay taxes. Yeah. So you may say it's only one country, but this is how adoption happens slowly, right? Today, El Salvador, tomorrow, some of 5 other countries will adapt and all that kind of thing. But ultimately, I think governments will have to succumb. Okay.
Okay,
For
thank you.
example, right? Supposing I have some money, I buy some painting, M.F. Hussain or whoever, right? Some painting I have, right? I buy because I feel that it can protect my purchasing power. Should government be concerned? Is it any of their business? It's my money. I am buying some painting from you, right? Why should anybody be concerned? I'm just saying, instead of painting, I'm buying Bitcoin. Why are they rattled? They are rattled because they know what they're doing. They very well know what they're doing. And this is a protest of the people. People are quietly moving away from that system to an alternate system because they're feeling shafted. Right? When enough people move, enough critical mass, already it's happened, right? So I think, what can they do? They can't do anything. Yeah, without regulation, isn't there a chance of misuse? I think we give too much credit to our regulators, their intelligence and their intent and so on, right? So we have a lot of regulators in India. Is everything working perfect? Can you even ask these governments where they're spending their money? Can you hold anybody accountable in this country? There are so many regulators, right? Anybody from SEBI here? I mean, okay, right. So just because something's regulated doesn't make it less scammy. Our banks are regulated. What happened to Yes Bank? Right? We had the Satyam fiasco. We had ILFS fiasco. Correct, right? The institutions are corrupt. Okay. You think Mother Teresa is being a regulator? How can we calculate intrinsic value of Bitcoin? There are some models I'll show. Okay. Look, if Bitcoin, if you assume that Bitcoin is monetizing, meaning it's on the path to becoming global reserve currency, and there are only 21 million Bitcoins ever. Look at the total money being printed and so on and so forth. It can go. I mean, it can. I'll show some charts. Okay, there are some models available online. You can, if you follow Twitter, there's something called S2F, stock to flow model. I'll show that, according to which by 2030, Bitcoin is going to be 1 million. How easy to trade or liquidate the Bitcoin? Kamal Jain. So let me tell you something, right? Your stock market works 5 days a week and only for a certain period. Bitcoin trades 24/7. 24/7. You want to liquidate at 3 a.m. on a Sunday, you can liquidate. Okay. Nothing is simpler. Okay. Where does the value of Bitcoin originate from? We'll come to that. Okay. Yeah, we'll come to that. Any other questions before we move on? Okay. All right.
In India, the banks are not allowing to buy or sell Bitcoins, and they stop the funds for payment for the Bitcoins.
See, I have account in Wazir DX, Coin DCX, and ZepPay. Okay, I have no problem. I mean, of course, all the banks are not there in all of this platform. Okay, but for example, Coin DCX and WazirX, you could use MobiQuick wallet to transfer money. Okay, once the money is inside the exchange, you can use it to buy any cryptocurrency, Bitcoin or Ether or anything. Okay. Alternatively, you can do peer-to-peer. I'll show that also. There's something called local Bitcoin. You go there, you can. So then there you're trading peer-to-peer, no exchange. Okay, it's like you and me trading, right? You transfer money through GPay, I transfer Bitcoin to you, as simple as that.
Okay.
Nobody's permission required. It's a permissionless game, right? We want to eliminate all this, intermediaries and gatekeepers.
Okay.
Okay. So now,
sir, I just wanted to understand one thing. How is the gold standard system, which was in existence, and this new model of Bitcoin, as in gold standard, because the gold supply was limited, you could only print that much currency based on the rate of, as in $35 per ounce.
correct.
So what prevents governments from devaluing their currency? So from $35 per ounce of gold to say $60 per ounce and print more. And how does Bitcoin resolve that, as in the gold standard?
Yeah, so we'll come to that, but we are no longer in gold standard.
Yeah. After that, as in this becomes.
So in 1971, we came off the gold standard. At that time, it was $35 per ounce. 1980, gold went to $850. That is 20x in 10 years. Okay. Now it's going to go even higher, right? So look, no government wants to be fiscally responsible. Okay, because it's not fun, right? You need to balance your budget. You can only spend what you collect in taxes. You can't raise taxes like anything because the people would protest. You will vote you out next term. So I understand things from their perspective, right? So they don't want to raise taxes. This is the easier way for them to steal. They print more money. So Bitcoin has a very predefined supply.
Similar to gold, as in similar to gold.
Yes. So, okay, one of the measures of how hard a money is a stock to flow ratio. Stock is the total amount of stuff already there, and flow is incrementally how much you are getting every year, right? So, at the moment, Bitcoin's stock to flow is slightly inferior to gold. By 2024, it will be superior to gold. For example, gold, only 1.5% of available stock gets added every year. Okay, that's all you could mine. Okay, so you cannot flood the gold market with the increased supply because there is no increased supply, only 1.5%, right? So by 2024, Bitcoin would be even better than that. Now it's slightly lower. Yeah. So which means that so even as of today, only 900 more Bitcoins can be created every day as of today. And by 2024, it'll halve to 450 Bitcoins every day. And then 4 years later, it'll become 225. So every 4 years, its supply halves, right? Opposite of quantitative easing, it's quantitative tightening.
Yeah. So when they say that US dollar to Bitcoin is say $100 per Bitcoin.
Okay.
So when the supply is limited, the governments might actually devalue the link, as in say $100 per Bitcoin, they make it $200 per Bitcoin.
No, the government, Bitcoin has got nothing to do with government. Okay. Okay, government can't do anything.
Okay.
If they could, they would do, but unfortunately for them, unfortunately for us, they can't do anything. Okay. So, couple of questions here. What happens if a law is passed by government making Bitcoin transaction or holding illegal? Is there a possibility of this happening? Yes. Okay. Obviously, no one in power is going to let go of that easily, but there are ways around it. Something called if you buy Bitcoin through centralized exchanges, there is a KYC process, okay, through which they can track you and they can do stuff, right? But I told you there's also a peer-to-peer platform through which you could buy. For example, you buying Bitcoin from me, I buying Bitcoin from somebody else, and how would the government even know? They can't track it. Okay, so that's the initial spirit of the Bitcoin. Okay, all the centralized exchanges came after that. Okay, if you're doing Bitcoin peer-to-peer, non-KYC, there is no way anybody can track it. Okay, they can hold it, they can make it illegal, but how would they know? For information, Yuvraj Manohar, in the US, holding gold was made illegal from 1930s to 1970s. Can you imagine? Private citizens could not hold gold. They confiscated gold from people at $20 an ounce. And after confiscating everything, they immediately revalidated to 35 per ounce, right? So these are the kind of stuff that governments do. They are good at doing all this. But if you're buying a non-KYC Bitcoin peer-to-peer, there is nothing anybody can do and they can't touch it. Okay, let me answer a few questions. You said Bitcoin will be capped at 21 million. Yeah, you can own fraction. There's some misconception that you have to hold one Bitcoin. No, Bitcoin, because it's digital, it's infinitely divisible. So you can have 0.000000001 Bitcoin also. You can buy Bitcoin for 100 rupees also. Is that clear? Okay. You could invest 100 for every month. You could invest 1,000 rupees in Bitcoin also. You'll get a fraction of it. Yeah, but you could do that.
Can you tell the process how to start investing in Bitcoins?
Yeah, we'll come there. Okay. I thought you can always mine Bitcoin by following the set process. Who decides it to be limited? No, you can mine, but the mining rewards and all are limited. Okay, we'll cover that in the next section. Authenticity in person to person. Basically, the Bitcoin is the money is in escrow. I send money to you. Once you confirm that, it will be transferred. Okay, so it is safe. It's as authentic as it gets. To buy Bitcoin, you need some currency. As it tied to a currency, can't its value be manipulated? It's a big market now. It's over $1 trillion market cap, right? So not easy to. I'm not saying it can't be manipulated, but it's a very large cap now, right? And very soon it will be bigger than the market, bigger than the GDP of India. It's difficult to manipulate at scale such big things. Who controls the supply of Bitcoin? Computer code. Okay, there is no one person. We don't want a situation where some guy sitting there, IAS officer, this officer, that officer, Federal Reserve, controlling this and that, and telling us plebs what we should do with our life. So it's all computer code. Bitcoin code is open source. It's one of the most scrutinized code bases ever in the world, right? So if you are into computer science, you can check out the Bitcoin code and you'll get the answers. It's open source. Anybody can see it. Okay, so that's a good thing, no? Yeah, Biswajit, you have some question? I see the hand. Okay. Okay, if there is questions are done, we can move on. Okay. This is just to summarize, Bitcoin is a way for us to preserve our purchasing power, and as it monetizes, whoever is getting on the bandwagon can actually create generational wealth. Okay. So in the past, we had a gold standard. It became fractional gold standard because all these guys, what they used to do, banks is they will have 1 ounce of gold and then issue promissory notes for 3 or 4 ounces, hoping that all of them don't come back and ask at the same time. Similar to modern day banking, right? We have fractional reserve banking. So if all the depositors go and ask money at the same time, banks, this is called as a bank run, right? A bank will fail. Basically, I think what's when you look back in history sometime later, we'll find that this period from 1971 till now is a short interim between a gold standard system to Bitcoin standard system. Okay, one second. Wow. Okay, so Bitcoin, gold, silver is called as a hard money, easy to create out of thin air, supply is limited. Therefore, these things, what is scarce has value. Okay, what is easy to produce, what is of infinite supply has no value. For example, sand doesn't have as much value. Paper currencies doesn't have as much value. So all these things are tried in the past, right? Ultimately, all of them stop being mediums of exchange. If you look at the global central bank, the global, empires, not technical empires, you could say initially at one point in time, Spain was the most powerful nation in the world. The Spain currency was the reserve currency. And then the baton passed on to Netherlands, and then France, and then UK. And after World War I, it's primarily the US. In all these cases, it's not like someone gracefully allowed the other guy to be a central, the reserve currency. It's usually because of wars and many other reasons, this guy became feeble and the other guys became powerful, right? As you can see this chart, right? This guy is in decline, the other guy is powerful. So the most powerful nation at that point in time becomes, that currency becomes reserve currency. Okay, and historically that's been the case, right? And that's going to be the case even now also. Reality, what's happening? The productivity is increasing, right, because of technology. Earlier we used to pay for the ISD calls. Now ISD calls are free via WhatsApp, right? 1997. Just getting a dial-up modem, 256 kbps or whatever internet connection used to cost so much. Now we are getting several gbps at fraction of that cost. So technology is deflation, right? The productivity is increasing. Unfortunately, what's happening is with that, our quality of life should be much better, because things should be cheaper and we should be having better lives. But instead, because of this money printing, the real wages have become stagnant, and it's an endless treadmill for most people, mainly because the purchasing power has been declining. Okay, if the purchasing power has remained intact, all of us can lead a very leisurely, happy life. You know, single income families, 50 years back, we all had single income families, right? And people are living decently well. Now, how many families can afford to have a single income household? Tell me. Right? Because, you know, just to stay in the same place, everybody has to earn, right? So all those issues. Just some, you know, comparison. Issuance is by central bank and some 5 guys, 6 guys sitting there and deciding how much to issue, how much money to print. Settlement is centralized. This is Bitcoin. Satoshi is the fractional unit, the smallest unit of Bitcoin you can have, which is 7 zeros preceding 1, right? So this is this much you can buy, right? And then it's decentralized network. There is no one central node or authority deciding things, right? And issuance is through computer code that is auditable. Okay, it is not, it is open source, right? Anybody technically inclined, you can go to the Bitcoin website and see the actual code there, right? It's all there. So it's transparent, straightforward, community driven. And there is the Bitcoin, which is the token or the coin, right? The value, the unit, right? And then there's a Bitcoin network itself. And then there's a Bitcoin blockchain. Okay, so we'll differentiate it by small b is the coin, which is what we'll talk about. We'll not spend much time on these two, but predominantly different people use Bitcoin to mean any of these. Okay, a matter of terminology. Basically, Bitcoin is digital scarcity. For a long time, people are trying to figure out how to create digital scarcity, because let's say you have a file, you can immediately copy it and send it by email, share them, and so on and so forth. So creating digital scarcity is not an easy thing. Okay, and that is the technological breakthrough that Bitcoin solved. Okay, digital scarcity, and through internet, value can be transferred. Okay, once email came, you know, the post office almost become like dinosaurs, right? It takes such a long time to transfer letters and stuff, right? Snail mail, right? With email, it doesn't matter whether you are sitting in Chennai or it takes the same, almost the same time to the US, right? Just a click of a button, few seconds, it goes there. So likewise, value can be transferred via the internet. First of all, we can create digital scarcity, and therefore there is a value, and this value can be transferred via internet. So these are the technical aspects of Bitcoin, which I will not cover at the moment. So it's only a matter of time before Bitcoin becomes a measure of value, because looking at Bitcoin terms, everything is becoming cheaper year after year. Okay. On Bitcoin terms, for example, IMB fees have been coming down. Price of a car has been coming down. Price of a house has been coming down, because Bitcoin price have been going up year after year. Okay, so you could also say that, you know, on Bitcoin terms, because Bitcoin has got a fixed supply schedule, everything else. Instead of saying Bitcoin is volatile, you can say that on Bitcoin terms, the fiat currency is volatile, because the fiat currency, anyway, nobody knows how much they're creating, what's the plan, what's the limit, nothing, right? So you could argue that in Bitcoin terms, every lot of other things are coming down. The fiat currency is moving up and down, but the trend has been down only. Okay, so because Bitcoin is interdisciplinary in nature, it's at the intersection of computer science and economics and game theory. People who have expertise or specialization in one of these subjects sometimes think that it's a scam or a tulip mania, whatever, right? But generally, if you dig deeper, you find that already Bitcoin has already won, right? No, it can't be stopped. If any of you have been following the Bitcoin news, China banned Bitcoin mining. And at that point in time, at the time of the ban, China had the world's largest Bitcoin mining capacity, right? And overnight it was shut down. What happened? The entire Bitcoin mining, this one, right, capacity, right, moved all over the world, Germany, Iran, US, right? So the network is back to its old computing power right now, right? It has taken a lot of body blows and shocks. You have to understand that 13 years, right? All kinds of shocks have happened, right? It survived all of that. It's extremely resilient and anti-fragile. This is what I was telling about it. Total hash rate is the computational measure of computational power employed on the network. The greater the computational power deployed on the network, more effort it takes for some hacker to break it. So larger the better. As you can see, this is when the China shock happened, right? It came down and immediately went back up. Okay, the largest mining country in the world putting a ban, and it didn't cause a dent. It caused a temporary dent, but it's back up. It didn't go down and stay down. Okay, so it's a super resilient network. And as I mentioned earlier, we are now transitioning from gold standard to this fiat standard, what we have now, which is cause of a lot of these problems. In the future, it will be a Bitcoin standard. In 2010, Mark Andreessen wrote this seminar article, right? Software is eating the world. That's before the SaaS models came into being, right? SaaS and other things. And suddenly we had Airbnb, Uber, right? Disrupting software is, Uber is just a software code, right? They don't own anything, right? Likewise Airbnb, right? Predominantly it's a software code and disrupting all kinds of industries. It's not disrupting the software industry, it's disrupting the hotel industry, hospitality industry, and mobility industry, and so on. Likewise, Bitcoin in this decade is going to be disrupting a whole lot of industries in a similar vein. And just a comparison between fiat currency and Bitcoin economy, where there's abundance of cash, there's a scarcity of goods. As you can already see, there's all kinds of shortages happening in the US and everywhere else. And where the currency is valuable, where the money is scarce, you would actually find abundance of goods. Okay. In Bitcoin's terms, everything is cheaper, right? Everything is getting cheaper. Now, again, there are a lot of fear, uncertainty, and doubt regarding Bitcoin. The volatility is one of them. Why is it so volatile and all? Well, we concede that it is volatile as of now. It changes. Any technological breakthroughs like that, right? You need to have that, you have to cross that point of mass adoption when things stabilize. But picture this for a moment, right? So there is a philosopher called Ludwig Wittgenstein. So he asked his friend, at one point in time, people thought that people believed in the geocentric view of the world. I think the sun revolves around
ready.
Yeah.
What are we having?
Sorry.
Bread with cheese.
Which one? Sorry.
Soup.
Yeah.
I think the mic is on by default.
Oh, okay. Can you hear me? No. Hello.
You can hear us.
Yeah. So Ludwig Wittgenstein asked his friend, why did people at some point in time believe in the geocentric theory? As in, why did people believe that sun revolved around the earth? Right? Because at some point people actually believed that. And then we had this heliocentric theory where earth revolves around the sun. Right? It's just a shift of perspective. Correct? So his friend remarked, that's because it appeared to them that when they observed that sun is revolving around the earth, to which Wittgenstein replied, well, that's not a very correct argument, because if that is the case, based on their framework, what should have happened for them to believe in a heliocentric theory? Okay. It's a very deep thing, which, I mean, the point of it is that a lot of times we believe a lot of things without deep thought. So similarly, when it comes, this is an interesting article you can read by Alan Farrington called Wittgenstein's Money. Highly recommended if you want to really go deep into this. So he's asking, what would it seem like if it did? What would it seem like if it did seem like a global digital sound, open source, programmable money was monetizing from absolute zero? So his question is this: assuming such a money is there, okay, a global digital sound, open source, programmable money, and it's monetizing from zero, which is what Bitcoin has been doing. It was zero, right, at some point 2009. From there it's going. Would it be any different? Such a thing actually existed and it's happening. Now, the path of monetization of such a currency will be very different from what we are seeing in Bitcoin. We don't know because we have not seen it. As simple as that, correct? So that explains a lot of this volatility. As more and more people adopt to Bitcoin, in fact, most people are not selling Bitcoin. It's the marginal seller buying and selling, but I think volatility will reduce over a period of time. So how Bitcoins are created, okay? The only way Bitcoins come into being actually is through mining, okay? Mining is a sophisticated term for basically people running expensive hardware and the Bitcoin software on that, okay? They solve mathematical problems, okay? The protocol is known as proof of work. It's technical, but the point is effort has to be expended, not manual effort, computational effort. Computational effort costs money because you need to invest in expensive hardware. You need to cool them because it gets very hot, the equipment. So you need electricity to run the hardware and for the cooling also. So there's a cost attached to creating a Bitcoin. Exactly like gold mining, right? Can you mine gold for zero? No, right? It costs money to buy those mines and then go deep and then bring the ore and then refine it, right? As it should be, right? It is something valuable because you have to expend a lot of effort to get that gold. Likewise, people have to expend money or value to get Bitcoin. So as of now, there's a blockchain. A block is a set of transactions, okay? And these are chained together, hence blockchain, okay? So on the Bitcoin network, transactions happen. Transactions are this guy sending Bitcoin to that guy and that guy sending Bitcoin to another guy. These are the things, okay? I'll come to you, Biswajit, okay? And every 10 minutes, one block is manufactured and then it's chained to the previous set of blocks and they're continuously chained, hence the blockchain. So the miner who cracks the puzzle, okay, only one miner can crack the puzzle and hence get to write the block, okay? And that happens every 10 minutes, okay? It's like a lot, basically it's a sophisticated lottery, okay? Probabilistic in nature, who gets it? Everybody has expensive hardware. Just because you have the most expensive hardware doesn't mean that you will win all the time. It is still probabilistic lottery, so that it keeps everybody engaged. So incentive structure is designed very intelligently so that people in their own self-interest do all this. Then they get 6.25 per block. The winner of the lottery gets 6.25 Bitcoins per block. And then when you move Bitcoin within the network, which is the transaction, you pay some transaction fee. Right now, it is $3 per transaction, approximately, very tiny. Okay, roughly around 2,000 transactions happen per block. So that's $6,000 plus 6.25 Bitcoins is what you get every 10 minutes. So this is already the existing Bitcoin they're paying. So the new Bitcoins that are coming is only 6.25 per 10 minutes. That translates to 900 Bitcoins per day. That's all the new supply that's coming now. And every 4 years, this reduces by 50%, halving. Okay, so 2024, this 6.25 will become 3.125, and 4 years later, it becomes half of that. So asymptotically, the supply, incremental supply also reduces. Okay, this is how any Bitcoin comes into being. Average transaction fee in Bitcoin, as you can see, is currently around $3. Okay, when the network is congested, it becomes more, but of late it's been around $3, which is nothing. It costs $3 to transfer millions of dollars. Okay, so this is the block subsidy. Block subsidy is the Bitcoin that's released to the miner for creating the block. There's a concept called Bitcoin, the block subsidy halving. Okay, this is all part of the Bitcoin protocol. This is all a bunch of things that created the breakthrough. Okay, so every 4 years, even Bitcoin first started, it was 50 Bitcoins every block or 10 minutes. Then it went to 25, and then 12.5. Now we are into 6.25, and it will after 2024 it will become half, and slower and slower and slower. Okay, yeah, Biswajit, you want to ask something? Hello, Biswajit, I see your hand. Do you want to ask something? Okay, I think it's a mistake. Okay, so 89.79% of Bitcoins already been mined. Okay, max supply is 21 million, circulating supply is this much. So yeah, should Bitcoin be considered an asset or an instrument? Is your house an asset or an instrument? It's an asset. It's an asset. Okay, there are so many crypto countries coming every other day. Is there any link between Bitcoin and other? There are no link between Bitcoin and other cryptocurrencies. These are all wannabe Bitcoiners. This is like a difference between Harvard MBA and IIPM MBA, right? IIPM is also MBA. To the uninitiated, there are so many MBA programs which you want to take, but there is only one Harvard. There's only one IMA. There's only one IMB. Okay. Anybody and everybody can create an MBA, but they're not same, right? Yeah. So this is a max supply, and minus computer puzzles. What do they solve? This is like basically they solve difficult to solve problems computationally, basically by brute force. Okay, it's not brains. You have to deploy enormous amount of computer power. Difficult to solve, but easy to verify. Like a Rubik's cube. If you ask me to solve this, I may struggle, right? But if you show me this, I know that it's been solved because it's very clear each side has only one color, right? So these are the nature of the problem. Whenever anyone solves it, other miners can easily verify that the solution is correct. Okay. Okay, some question. With present regulatory environment in India, how social media application is surviving? Okay, we will not have any discussion on non-Bitcoin related topics in this particular thing. Okay, who poses the problem for miners to solve? It's all in the code. Okay, the original Bitcoin code, the Bitcoin core, right? All this. Yeah, just okay. The consensus algorithm that drives the Bitcoin innovation is called a proof of work. Okay, we'll not get into that, but if any of you are interested, you don't understand this to do. I will skip this Bitcoin cryptography and other things. One more thing I want to talk about is called a difficulty adjustment. What that means is every 2000 blocks, the difficulty problem adjusts. What that means is that, let us say there are miners. Physically, let's say there is a gold mine, right? And then there are a lot of miners. Now somebody says, I want to mine more gold, so I'm going to get 20 extra miners and put them all there and get them, can I get more gold? Yeah, in physical case, probably in gold they can get. But in Bitcoin's case, even that is not allowed. That's not possible because as more and more miners get into the network, more and more computational power is deployed in cracking the code, cracking the problem. The difficulty level of the problem adjusts upward. Okay, such that it takes approximately 10 minutes to solve the problem, regardless of the number of miners trying to crack the code with advanced equipment. If there are lesser miners, the difficulty adjusts down. If there are more miners, more computational power is deployed, the difficulty level adjusts up. So this is dynamic. Okay. So all these things have been thought through initially into the code. There's been no adjustment after that. Okay. 1 second. Bitcoin is actually deflationary. We'll come to that. Some Bitcoins have burned, a lot has been lost permanently. Satoshi Nakamoto's 1 million Bitcoins are never moved. Okay. It still stays there. And Bitcoin is deflationary primarily because it is quantitative tightening. The supply is reducing. So incrementally, there's a fewer and fewer Bitcoin being created. So other cryptocurrencies may not be Harvard or IBM, but at least some MBA, we can solve some purpose and make a living. Some of the Abhishek, some of them are trying to do. But there are a lot more scams than I think approximately 100 plus cryptocurrencies are getting created every day. I don't know. A lot of them are a solution looking for a problem. I'm not dissing any of them. Okay, but most of them are wannabe Bitcoins. Okay. Understand miners' basic function is to ensure the blockchain is maintained properly. So the miners which identify the correct block to be connected to the chain get the proof of work and get rewarded. Is that correct? Yes, that's correct, Ramnath. Okay. Yeah. Okay. So there are a lot of game theory elements involved in Bitcoin. If any of you are familiar with the work of Thomas Schelling, who won the 2005 Nobel Prize in Economics. He wrote this book called Strategy of Conflict. There is a concept called Schelling point. Okay, let me explain this in an example. So all of us are playing a multiplayer game. And let's say that without talking to each other, we are going to guess, we are going to select one square in this picture. And if all of us select the same square, all of us gets rewarded. Okay. If we select different squares, then nobody gets rewarded. Is the question clear? All right. So we're going to choose one square here, all of us, and we are not allowed to talk to each other. So we're going to independently choose a square. Okay. We're applying whatever logic we are applying. Okay. And if all of us choose the same thing, all of us gets a lot of money. And if you are choosing different squares, none of us get anything. That's the game. Now, can someone tell me which square would be selected? What are the chances of a particular square? Which square is likely to be selected? Very good. A6, Abhishek Kandelwar. Why? Red. So I'm seeing red, right? So correct. Right. So why are you choosing red? We are not even spoken to each other, right? I also chose red. So can guys tell Abhishek and Subbaraman tell why it's red?
Because it's distinctive.
Yeah, exactly. Exactly. Not only that, we are also hoping that other guys are also going to have a similar line of thought and think and choose that. Unique, correct, right? So this is called the Schelling point. A6 is the Schelling point because we have, all of us have independently arrived at that conclusion without having talked or discussed. Interesting, right?
Yeah.
So this is a Schelling point. So Bitcoin has already reached the Schelling point of money. Okay, you can Google for this article. Fascinating. Bitcoin's Schelling points and defense of Bitcoin. So a lot of people like us, right? So Bitcoin doesn't have a CEO. There is, no one guy directing things and all that kind of thing. It's basically peer-to-peer, right? So a whole lot of smart people have thought through what the governments are doing, how they are debasing the currencies and so on and so forth. They want to protect their wealth. And then they stumbled on something called Bitcoin and they see the hard supply, only 21 million, very transparent, peer-to-peer, no central authority. And then all of them are converging into that as a store of value. Bitcoin is the A6 square, the red square equivalent when it comes to money. Okay, you can read this article by Emil Sandstedt, Schelling points in defense of Bitcoin. Okay, who is the writer of this Bitcoin algorithm? The guy called Satoshi Nakamoto. That's not his original name. Nobody knows who is. And that is a feature, not a bug, right? Tomorrow, if government wants to control Bitcoin, they can't arrest him because nobody knows who is. They can't jail him. They can't kill him. All these altcoins, shitcoins, tomorrow, if they want to bring down the Ethereum network, government can trump up some charges against the Vitalik Buterin and Ethereum is gone. Or he'll be co-opted, right? Either they'll put him in jail or he'll have to do whatever government says, right? There's an Ethereum founder for information, right? So Ethereum calls itself decentralized cryptocurrency, but that's a single point of failure, which is the founder. Okay. Likewise for all crypto coins, most crypto coins. In Bitcoins, who will they attack? Government's going to attack anybody because nobody knows who the founder is, right? So that is the founder not being known is a feature of the design, not a bug. Okay. This is stock to flow model. You can Google for it. This is a theoretical. Somebody asked for the Bitcoin's value. This is a chart model, right? The red color is the actual Bitcoin price. This is the model indicated price. Okay, this scale is logarithmic in nature, so every square is 10 times higher than that. So by this model, if this model is true, Bitcoin should be close to 100,000 by the end of this year, calendar year. It should be close to 100,000. This is here, and by 2026 or something, it has to be $1 million. Okay, so sounds cool, right? Okay, this is the structure flow model. So Nayib Bukele is the head of El Salvador, right? So he is tweeting and he is buying it for El Salvador, his country, right? It is like Narendra Modi tweeting, right? But it's a tiny country, but they are just buying Bitcoin themselves for their country, right? So that's a level of, so normally when people are new to this thing, they buy Bitcoin because that's the most popularly known, that is the one with the highest market cap. And then hear a little bit about crypto, this or that, then all kinds of things come here. When you fully really understand the crypto industry, then you find that ultimately there's only one asset to hold, and that is Bitcoin. Okay. Okay, now we'll come to where to buy a Bitcoin in India. Okay, this is the second part. Now we are moving. How to buy, hold, and profit from Bitcoin. Okay, purely utilitarian. You go to localbitcoins.com. Okay, you buy peer-to-peer. As you can say, somebody there, this is the Bitcoin is willing to sell, this is the price. You can IMPS, you can say, right? IMPS, Paytm, whatever. You go there, you'll find out all the guys who are willing to buy or sell at a particular price. Okay, you don't have to go through ICICI Bank or something. What I'm saying is, let's say you want to transact using this platform. Somebody says IMPS, you transfer money to this IMPS, Bitcoin gets released to you. Okay, so it's peer-to-peer. Okay, you're not sending it to exchange and all that. How will ICICI Bank or anybody know that actually you're transacting on Bitcoin? Because on one side is a simple money transaction, like you're transferring it to a friend, like you transferring money to me. Anybody's going to stop? No, right? So you transfer money and then Bitcoin gets transferred to you. Okay, this is peer-to-peer. This is non-KYC. Government will not know, nobody will know, nobody can touch you, touch your Bitcoin. Okay, this is the cleanest Bitcoin there is. There is no trial.
But what is the reliability of this transaction?
So the Bitcoin is in escrow, so don't worry. Okay, the moment you transfer the money, it's reliable. So you why don't you try it out for 1,000 rupees and tell me? Okay. Okay, so try it for 1,000 rupees. And these guys are verified. Okay, you can see those percentage and all, right? How many transactions are they are done and all. So they are rated like Amazon stock, Amazon vendors kind of thing, right? The bad guys get booted out. So what is this website? This website is localbitcoins.com. Okay, yeah. So I'll type it here for everyone. Localbitcoins.com. This should be your preferred approach if you are worried about government regulation and stuff like that. You should really be worried about those guys, right? And this is safe. You can try with 1,000 rupees and then you can add. You need to have a Bitcoin address for this, correct? Only then you'll get it, right? Because you need to have a wallet, right? So if you're buying through SEX is the centralized exchanges. If you are in India, you can use Coin, DCX, WazirX, Zeppe. These are what I use. If you are in the US, you can use Coinbase, or you can use Binance and things like that. Yeah. In this case, if the government wants to, yeah, I'll come to that. How to get a non-custodial Bitcoin? I'll come to that. But if you're using centralized exchanges, remember that they are companies and they are regulated in the jurisdiction of this country. And if government wants to block it, one fine day they can say you can't remove anything, you can't send money or take money out. Those things, those risks are there if you're buying through centralized exchanges. If tomorrow government wants to get nasty, they can, right? If you do this through the peer-to-peer thing, nothing will happen. Nobody can come.
But where it will be stored? If you do peer-to-peer?
Yeah, whether peer-to-peer or exchange also, I'll come to that. Okay, so when you say you own Bitcoin, what exactly does it mean, right? So basically, you have a pair of keys, okay, a public key and a private key. Okay, the ownership of private key gives you the right to send Bitcoin. Okay, the public key is mapped to an address, and just like a post box or email address, right? So if I want to send an email to you, I just need to know your email address, and I can send an email to you. Likewise, if I want to send an Bitcoin to you, if you have your wallet address, I can send Bitcoin to the wallet address, as simple as that. If you look at the email system, the sender needs to know only your email ID. But for you to log into your account and see or send emails, you need to have a password, right? So the password is equivalent to a private key. The email address is equivalent to a public key. Okay. So if it's not your keys, it's not your coin. Okay. You need to understand that. If you're buying through centralized exchanges, you don't have access to a private key, which means that it sits in the wallet assigned to you by the exchange. These are not technically your wallets. Okay. So even if you're, therefore, what it means is that you need to have your own wallet where you store the private key, where you access the private key. Then you control the coin yourself. Okay. Now, how do you do that? I would recommend hardware wallets. A wallet is just a key manager. Okay, it manages the key and all the interface and connects to the Bitcoin network. Okay, it takes the complexity out of that. So it's not physically storing the Bitcoin here. It's storing, all it's storing is the private key associated with your Bitcoin address. Okay, so tomorrow you want to spend your Bitcoin, you need to sign off with your private key, which automatically this will have. Okay, Trezor is a hardware wallet. There are various versions of it. The basic, this is just to answer Ashwini Kumar, this is a non-custodial wallet, right? Trezor, right? This is model Trezor Black. There's also Trezor Model T, I guess, which is more expensive, but for 5,000-6,000 rupees, I think you can get this. Okay, pretty solid. You can also get Ledger. This Ledger Nano is there. This is again, there are more expensive versions, but the cheaper versions also are solidly good, right? Again, it costs around 6,000 rupees. Okay, so with the hardware device, you can have this is the hardware wallet. This is where you can store your Bitcoin. Okay, you can, when you buy peer-to-peer or whatever, you can transfer it to this wallet. Okay, you can go to the Ledger website. They'll show you a lot of videos how to do all that kind of thing and all. Okay. Both of these you need to connect to the internet. If you really want to be hardcore, right? Take security to a different level. You get Coldcard, a Canadian company. It looks like a calculator, nice interface and all that. It's a bit more expensive. It's around 12 to 13,000 in India. If you're outside India, it's just $100. Okay, Coldcard. And it is air-gapped. Air-gapped meaning it never ever is connected to your computer. Everything happens through QR code and stuff like that offline. So there is no way it can be hacked. Okay, it comes with a lot of James Bond kind of stuff. For example, somebody kidnaps you and asks you to give the password. There's a separate small wallet inside this, so you can fool the guy by put some little bit of Bitcoin there. So you can, when somebody threatens you, you can open the tiny the wallet which has a small amount of Bitcoin and show it in, this is all I have, right? So the security is now off the charts. Something like cold card would be like you can get everything in India now, sitting in Tetherbit. I think Etherbit. If you go to Etherbit website, you can get all this. It's a lot more cheaper outside India, though, right? So these are the 3 things I would recommend. If you are into this, Trezor is the basic one, hardware wallet. It can not only store Bitcoin, it can store other cryptocurrencies as well. Ledger is the number one. Just a moment. And if you really want to be hardcore, you can get cold card, right? This is the very. Hello, sorry, what is that? Okay. Okay, what is a crypto wallet? Crypto wallet is basically a key manager. Okay, when you get that, you'll get a seed phrase consisting of 24 words in a particular sequence. Okay, you can write it down and keep it somewhere. Okay, if you lose the hardware device, doesn't mean that you lose the Bitcoin. If you have the seed phrase, you can get another device and then import your wallet onto that. Okay, so the seed phrase, if you lose the seed phrase, everything is gone. Okay, so you need to have a seed phrase which is set of 24 words. You keep it there. It's easier to remember than remembering the private key, which is like all the hexadecimal things. The seed phrase unidirectionally maps to private key, and private key maps to public key, and public key maps to address, and it can't go the other way around. So it's safe, right? So when you get this wallet, all of them will come with a seed phrase. You write it down, and then even if you lose the wallet, if it breaks or whatever, you can recover your wallet because it's actually a digital thing, right? By getting another device and then importing the seed phrase, importing your wallet onto that, and your Bitcoins are safe. Okay, sounds complex, but when you start doing it, it's fairly easy. Now, there's something called a Lightning Network. You see in if you go to, if you see YouTube videos, you'll find that in El Salvador and places like that, Starbucks, McDonald's, everybody's accepting Bitcoin. These are very small payments, right? Normally, so these things don't go through the Bitcoin, actual Bitcoin blockchain network, because that has got capacity constraints, 7 transactions per second. And that's also not meant for all this kind of thing. So this is a level 2 or layer 2 network, right? So you could do a lot of these small transactions, Bitcoin transactions, and then finally at some point in time, end of the month or something like that, route the net transactions through the Bitcoin network. So this allows Bitcoin to be used in whole lot of regular transactions which you normally not use. Okay, it increases the scalability of the these are Wi-Fi enabled devices. They are, okay. So you can check out Lightning Network. Criticism, I'll just wind up fear, uncertainty, doubt, speculative, bubble to volatile, unbacked. These are some of the things that people have. Too volatile, but I think volatility is reducing.
Venkatesh, I have one question, because when I see that you also mentioned that you can invest in small amounts, like start with 1,000, showing like 7 zeros and stuff like that. Then you have 1. Yeah. And once, if you subsequently month on month or periodically, if you go on updating, do you mean to say that all this will be accumulated on your seed, whatever that you said, or will it be like accumulation of different transaction IDs or something, or the unique IDs?
Okay, in Bitcoin, every time you do, the address is different. Okay, but all that will be managed by the wallet. You don't have to worry about it. Okay, it's all abstracted away. With that one device, one seed phrase, you will control all of them.
So how it shows, like it will tell you 1 lakh the side of Bitcoin, will it show like that, or how is that? I mean, I'm not able to gather that.
No. So when you log into your wallet, crypto wallet, using any of this hardware device, it'll show your holdings. Okay, that wallet will have multiple addresses. There'll be one address for each transaction.
Okay.
If you have got 5 Bitcoins, five different transactions you have done, there will be 5 different addresses and associated Bitcoin with each of these addresses, all belonging to that wallet.
Okay.
Okay. Yeah.
So, so what it means that, okay, when you buy it on peer-to-peer platform, like what you mentioned, in that coin-based this one.
The
then
Coinbase
you-
is not peer-to-peer. Coinbase is a centralized exchange.
No, the peer-to-peer.
Peer-to-peer is a local Bitcoin I mentioned, right? In the
Yeah,
chat.
yeah, local Bitcoin. So when you buy on that, you also need that treasure, correct? The seed base.
Okay, so yeah, so okay, once you buy on the peer-to-peer, you have to give an address to which the Bitcoin will be sent.
Okay.
That address will be that address generated by the wallet, the hardware device.
Okay, so first you need to have the hardware device, then only you can do the transaction.
You are going to buy, right? If you are
Yeah.
going to buy, no, you can do the transaction anytime, but one hand you are sending money, other hand you are receiving Bitcoin. The Bitcoin has to be, that guy has to send it to a particular address.
Correct.
Right, like email address. Let's say you want to receive an email, right? You need to have an email setup, right?
Yeah.
Yeah, you need to have an address. So with a wallet, you will have one. Yeah.
Okay, so you first need a wallet and then only you can do the transaction, do the buying.
Then only you should do the thing.
Buying. Okay.
Yeah. Okay.
Okay.
It's 5K, 6K. It's not a big deal. You can buy that. Okay. How to set up a non-hardware? There are also paper wallets you can use. MetaMask is not for Bitcoin. Somebody asked MetaMask better than hardware wallet. MetaMask is primarily for Ethereum and other chains, not for Bitcoin. How to set up non-hardware address? There is something called a paper wallet. You can just Google for it. You don't even need to have a hardware device, but it helps. I would strongly recommend for security reasons. Okay. Yeah, there are a lot of, I told you, paper wallet, digital wallet, whole lot of things are there. But basically, ideally, you would not want something, a wallet that's connected to your computer at all.
Understood.
Okay. Yeah, well, I mean, let's say you're going to store 1 crore or something like that, right? You don't want to be nickel and diming, right? You buy a 5K. In fact, you should buy a cold card only. I mean, I would strongly recommend you buy only the cold card, right? It's air gapped. You can Google for the phrase ARG gapped, right? So it is the safest device currently on around, right? It's basically it's not even connected to your computer, right? There's no way anybody can hack, right?
Okay.
So other things you have to connect to the computer and all, right? So that's the thing. I would not want to have a daemon. You can Google for it how to create digital wallet, but I wouldn't want to have one of those, right? Look, MetaMask also, if somebody is really smart, they can. I mean, so far nothing has happened, but hackable. I mean, depending on how safe your computer is, right? So see, if you're having only few lakhs, it doesn't really matter, right? It's not going to be worthwhile for anybody to hack your thing. But if you're going to have a serious amount of money in that, then it's an issue. Longevity of cold card, look, it's a fairly, this whole thing is evolving, right? The different hardware wallets and all the enhanced security features. It's a fairly new thing. Okay, so if you ask me how long will a cold card actually last, I have no idea, right? Maybe it's 2 years old. The cold card concept itself is fairly new, right? Whatever they claim, we'll have to wait and see how long. But at the end of the day, right? I mean, it's very functional. Worst case scenario, if it breaks, you get another cold card. You have the seed phrase, you can port your wallet onto that. But in terms of use, the interface and all, it's fairly slick. Okay, with a calculator kind of interface, whole lot of security features which we wouldn't even thought about. All those things are there. Numeric keypad, right? Okay, so if you really want to get into understand, deeply about these things, I would recommend these books. This is about the Federal Reserve, creature from Jekyll Island. The bullish case for Bitcoin. You actually have a long form article free of cost. If you just Google for it, Vijay Bayapati, the bullish case for Bitcoin. And that article eventually morphed into a book. But this is a very non-technical introduction to Bitcoin. And also the Bitcoin Standard is a fantastic book by Saifedean Amos. Right. So these books would give you a bigger picture. The seed phrase is like a text. Seed phrase is a text. Is basically it is 24 different words in a particular sequence. If you're buying through a central exchange like WazirX or SEX, is wallet required? No. So say you are buying through WazirX, right? You don't need anything. You buy a Bitcoin, it stays in your WazirX wallet or your ZepPay wallet. Okay. What I would do is, if I'm not trading, I'm investing, I would move that, if the amount is large, I would move it to my own hardware wallet. If I'm going to flip it after 10 days or 20 days, it's too much of a bother, I keep it there. Okay. So when you buy through the centralized exchange, you don't need any hardware wallet because they give you one wallet on the platform, you keep it there. But remember, you don't own the seed phrase or private key for that wallet. Okay. Not your keys, not your coins. If you don't have the private key, if you don't have the seed phrase, these are not your coins. KYC has to be done in WazirX. KYC has to be done in every centralized exchange. Okay. And then they can map it, right? They know that the Bitcoin, let's say you buy through WazirX. Okay. There's a KYC to be done. And then you buy through WazirX, it sits there. So they know that you have bought that Bitcoin. And then you're going to transfer it to your hardware wallet. They will know from which, they know to which address you sent it, correct? Because from your account, from your KYC account. So they will indirectly know that you are the owner of that particular address, right? So these are called the KYC Bitcoins, but you can Google for this phrase. Why should I buy non-KYC Bitcoins? You will understand, right? But if you do peer-to-peer, none of this thing, no KYC, nothing. All I'm saying is that, right, we are not doing anything illegal. We are not doing drugs or whatever it is. And KYC is not required for everything. If I'm buying a painting, should I do a KYC? For what? It's my own money, right? Right. So, yeah. How can one sell from hardware wallet to a centralized exchange? So what you do is, from your hardware wallet, you move the Bitcoin to the, it's moving from one address to another, as simple as that. From hardware wallet, you move to the wallet address of your WazirX or ZepPay or CoinDCX account. Once it goes there, you can sell it.
And how do you sell on peer-to-peer platform?
Same way, right? You list yourself saying that I have this much Bitcoin to sell at this price.
Okay. Somebody
will contact you and they'll send the money. Once they send the money, they'll give an address to transfer it. You transfer it.
Okay.
If P2P, what is the tax implication on selling Bitcoins? Jairam Halingam. Look, nobody even knows that you are doing this on P2P. Okay, undefined. Okay. If you make money, it capital gains. If you lose money, but there is no way for anybody to know because, there is no way for anyone to know on P2P. And philosophically, I think that is correct. Okay. I'm just transacting with you and you are doing with something with me. And I don't think I have to explain everything to everybody, right? To the government and all that kind of thing. Can I transfer the Bitcoin from central exchange to hardware wallet? Yes, very simple. You go to any centralized exchange, they will say send or withdraw, whatever it is, right? You click that button, it'll give you, you just give the QR code or the ID, address ID, and it'll go there. Or NFT, another evolution of Bitcoin, crypto, no. NFT has got nothing to do with Bitcoin. Who determines the right value of the Bitcoin? The market determines. As it should be right for anything, right? It's the market that determines, right? Yeah, I am done with it. Any other questions I can take?
Can we have your email ID where we can ask you questions if required?
Yeah, I will type it on the chat.
Venkatesh, I have one question. What are the problems related to Bitcoin? So you explained some good things related to Bitcoin, but what do you see are the problems related to the Bitcoin? Which paper we don't have?
See, there is always the issue of government trying to, government, especially in India, right? The regulations are not clear, right? they keep on flip-flopping and all, right? So that is a risk. In terms of a taxation, it's very unclear. Okay. For example, they can come and say, you have Bitcoin, I'm going to tax you 50% of the profits or whatever. Anything can happen, right? A lot of risk I see from a government point of view, from government, how the governments would react to Bitcoin. Okay. Yeah, other than that, if you're buying a hardware wallet and are keeping your Bitcoin safe, I don't see any other issues. Okay, the central exchange has the private key and seed for Bitcoin, so it can be misused by the owners. Is it right? Yes, Gaurav Mittal, if they want to misuse, they can misuse, but then they will lose trust, and people, you will go and complain, and nobody will use that platform, hopefully. But that's a risk. See, the whole thing about decentralized thing is that you don't trust anybody because institutions are corrupt. That's what you have seen everywhere, right? So tomorrow, if that guy wants to shaft you, if you have a lot of money, then I mean, they can always shaft. There's nothing you can do. You can put a court case and all, but it's gone. So hence, this particular phase, if you are hanging out in a crypto world, right? What is that? Not your keys, not your keys, not your coins is a very thing, right? So you need to have the keys. Right, you need to have the keys. So you need to have your own wallet. It's like if you're going to keep a lot of valuable stuff, for example, gold and all, right? You're going to have your own private locker and keep it, right? So therefore, like that. How to set up an anonymous Bitcoin address? Look, here is how it works, right? Let's say you have a hardware device. Somebody asked it, Ashwini Kumar. Let's say you buy a new device, hardware wallet, there is an address associated with that. That is anonymous as such. When you transfer your Bitcoin to that address from a KYC address, that's when you lose anonymity. Okay, you get the picture? Hence, people are interested in having non-KYC Bitcoin. How can I transfer Bitcoin from one exchange to another? If you want to do that, you need to have accounts with 2 exchanges. Then you transfer. If you have it in one exchange, then simple. There's a transfer button there, and you have to give the address. You give the address of the other exchange wallet, it will automatically go. Okay, if I have Bitcoins at central exchange, okay, if you have Bitcoin at a central exchange and want to move to own wallet untraced, that's not possible, my friend, Raghuram Guda. So the moment you have a KYC address and you're going to transfer your Bitcoin to your own private address, they can, if somebody wants to track, they can track, right? Because very clear, right? There's a KYC. And that particular address is associated with your name and Aadhaar card and PAN card and everything. And then you're going to transfer from that to some other anonymous address, which is your private wallet. They will see, okay, this guy has transferred this Bitcoin to that person, right? That address. So they may guess that that's your thing.
No, I was saying the only probable way is to liquidate those Bitcoins at the exchange and then probably buy the new ones at the local site.
Yeah. The only way to do is to do peer-to-peer if you want anonymity, right?
Yeah.
And that's the safest way also, I think. Ultimately, money earned from Bitcoin will show up in your bank account. We would need to explain that. Okay, Nagendra Satyan. So now, interestingly, what I'm saying is, in the US, people are lending with the Bitcoin as a collateral. Okay, so there is a tax event is triggered only when you sell your Bitcoin. If I want liquidity, I will not sell the Bitcoin. I will simply use it as a collateral and get money, in which case I don't have to pay tax. Is that clear? Is the question clear? Ultimately, money earned from Bitcoin will show up in your bank account. We would need to explain that to the tax guys. We can defer it as far as possible. The trend I'm seeing is Bitcoin is being used as collateral. Can you imagine? Like a house, right? Like you mortgage your house and you get cash as collateral. You get cash, right? Likewise, you could use Bitcoin as a collateral and get cash. And you don't have to sell Bitcoin, right? So you get liquidity if you want. As long as you defer selling your Bitcoin, you could defer the tax. But ultimately, at one fine day, you'll have to pay. That's fine. When I convert Bitcoin to also when people start accepting Bitcoin, you start paying them via Bitcoin. How will anybody know that? There's nothing anybody can do. Ultimately, money earned from when I convert Bitcoin to money, then one has to show the source of funds for tax purposes. That's correct. Yes, you have to show that. Okay. Yeah, that is true. But you could use Bitcoin to purchase things. I mean, it's less applicable in India, but internationally, you are seeing a trend where a lot of people are accepting payments via Bitcoin. So you can spend that Bitcoin, okay, and Bitcoin value goes up. Therefore, price of good in Bitcoin terms becomes cheaper, and then you use the Bitcoin to buy these things. You don't get it. You don't get taxed. Can I transfer Bitcoin from hardware wallet to centralized exchange? Like, kind of yes. Transferring Bitcoin from your one wallet to another wallet is a straightforward procedure. Why can't government block P2P transactions on the wire? I don't know. They haven't been able to do, I suppose. Can you please share this presentation? Yes, I will do one thing. I will give it to Sushma, and she can email it to everybody or whoever is interested, the presentation.
So could you please comment on the certain obvious gaps in business opportunities related to Bitcoin and blockchain, which are presently existing in India, and how can people think of opening a entrepreneurial setup either here or maybe outsourcing, opening somewhere and providing people services to the people of India, because it is catching up at a very high rate in India.
Yeah. I think you can, for example, you can start exploring opportunities in Lightning Network, right? Lightning Network allows small transactions on Bitcoin, and I think it's a layer 2. It's the scaling solution that people are waiting for. There's also what's called as a Taproot upgrade, a new Bitcoin software upgrade happening coming this month. Now, that's going to allow smart contracts to be written in Bitcoin, smart contracts like in Ethereum, right? Then you could do a whole lot of things that you could do on the Ethereum platform on Bitcoin, right? That's going to happen starting from this month. So that opens up a whole lot of opportunities, right? Ultimately, Bitcoin can prove to be the Ethereum killer, not Solana or something else, right? If Bitcoin can do everything that Ethereum can do, and faster and cheaper and better, there is no reason for Ethereum to exist. Yeah, can you transfer from one person to another as a gift? Yes, you can. Yeah. Bitcoin has the same risk as investing in any other asset. If the demand falls, value will go down. Hari Natarajan. So Hari Natarajan, as I told you, right, there are 21 million Bitcoins only, and most of it has been mined. So incremental supply is only 900 per day. Okay, and that's going to half every 4 years. Okay, there are $50 million millionaires. I mean, 50 million people with net worth of 1 million or above, right? And this includes billionaires, centimillionaires, and so on and so forth, right? I think, and most of the people, I mean, I talk to in India, network and all that, hardly anybody has exposure to Bitcoin, right? So in terms of adoption, we are like 1997 in terms of internet. I don't know how many of you remember 1997, what stage internet was and where it is now, right? Back then, you need to have a high-priced internet connection to access internet, and things were slow and so on and so forth, right? I mean, 256 kbps, no audio, nothing, file sizes will upload slowly, right? Today, where is internet? Even my driver made everybody has access to internet, right? So if anything, more and more and more people are going to get into internet, into the Bitcoin, right? Yeah. So I think demand is going to exponentially go higher, while supply is going to reduce every 4 years. Any info or docs on Bitcoin? I think Bitcoin is something as a current fiat regime collapses, right? You need this is the only, along with gold and silver, the only store of value that you have, and that's going to keep purchasing power intact. So I think this is something, the new world order is going to be built around holders of Bitcoin, right? For example, if you hold one Bitcoin, it will be a big deal eventually, because the price goes to 1 million, 2 million, 5 million. Even one Bitcoin is going to be big. Even now, one Bitcoin is a big deal, right? It's like $65,000. Like that's around how much? 50 lakh, 45 to between 45 to 50 lakhs is volatile, right? So almost the price of a house, right? One Bitcoin, right? So if it's going to go 10 times, 100 times higher, I mean, I think we are in the very early stages of an exponential move. And I think this is a time to talk about entry strategy and not exit strategy. How does Bitcoin solve the medium of exchange of fiat? Supply is limited. How will people who do not hold Bitcoin eventually everybody will start holding, like El Salvador, now everybody has Bitcoin. You can Google for the case study of El Salvador. I think beginning of 2021, nobody had Bitcoin there. Right? Now there's a Bitcoin beach, every shop, McDonald's, Starbucks, everybody accepts Bitcoin. There's a Bitcoin ATMs, right? So, this, once it reaches the critical mass, right, the adoption can be really explosive. Right. Yeah, I mean, we've come a long way. I mean, there is no founder, there is no CEO, nothing, right? On its own, like the Schilling point I told you, people have converged on this as a solution for their monetary problems, right? Now countries are coming. So Michael Saylor, right? So most of these corporates have a lot of cash, right? If any of you are in the CFOs or something, you're going to have this pool of cash reserves. If currency is rapidly depreciating in value, you could have a Bitcoin as a reserve asset, right? Instead of parking it in a bank and getting 4% and getting taxed on that, right? You keep it in Bitcoin, value is going up, right? So I think ultimately, I think it's only a question of when other people buy, right? When do you see blockchain businesses starting in India? Simple ones like mining firms. I don't know about blockchain, but regarding mining, I think regulation has to be transparent, first of all, for people to invest in this kind of things. And electricity has to be cheap and easily available. I don't think we have solved those problems, right? Mining will gravitate to places where cost of electricity is very cheap. Okay, I think in a retail, for retail people like us, households, electricity is cheap, but if you're running it as a business, it's not. The commercial rates are not cheap.
No, sir, but I think in places like J&K and Himachal, maybe collaborating it with the solar or renewable energy source, it can be done if it is allowed to be done.
Yeah, that's what I'm saying. Regulation has to be clear, right? Because if the source of the price of electricity is very cheap, right? Because electricity is all trapped, right? We can't. There is a national grid, right? We can't transfer. Even let's say your electricity surplus, you can't transfer it to neighboring countries, right? So it's trapped within the country, right? So if the prices are attractive, automatically people will start running the Bitcoin business, mining businesses. Bitcoin, yeah, that's also Bitcoin dependent.
There is some disturbance. Could somebody mute?
Okay, whoever is talking, can they mute, please? Yeah, I hear a woman's voice. Could you please check and mute it if it's not muted, please? Okay, yeah, Bitcoin is dependent on reliability of a network. How do you get past a network availability problem? Yeah, I mean, now it's everywhere, Bitcoin, right? I mean, the nodes are all over the world. So even if some parts have a problem, network problem, the nodes will keep operating elsewhere. How about solar powered mining? I think it all depends on the cost. I mean, end of the day, look, for it to be a business, mining today, right? I mean, it's one of the big opportunities, especially for places in the US. I think a lot of mining companies have gone public, if you have noticed, right? People are talking about the Bitcoin mining companies as the next FANG stocks. In fact, this year, the listed Bitcoin mining companies have performed much better than the Facebook, Google, Amazons of the world. In P2P network, how do we avoid fraud? What if we are paid to the person Bitcoin sent to our account? So there is an escrow, Gaurav Mittal. In P2P network, how do we avoid fraud? What if we are paid to the person Bitcoins are not sent to our account? So the local Bitcoins, or any other P2P platform, there are the checks and balances, right? If you are doing this kind of fraud, you will not be listed. You will be removed from there. Okay, and every person who's listed there offering their Bitcoins for sale, they have the reviews by other people, other buyers. So you only transact with people who are 90% plus or 100% plus, right? They also have a reputation to manage, right? And money goes to escrow. I mean, don't worry. I mean, so the money goes to an escrow account. Once the Bitcoin is transferred, the money is released. So it's that's not a problem actually. Yeah. You try it, you will know. You try for 1,000 rupees, you will know, right? Try for 1,000 rupees, you will find out how safe the thing is. You will see the workflow, the process flow, and all, and then you will get confident, and then you can do that. But it's a lot safer than what you think it is. Any other questions? Okay, then we'll wind up. I will send the presentation to Sushma, and she can share it with whoever is interested. Anyway, thanks for being around, guys.
Yeah, thanks, Venkatesh. It was very, very interesting and informative discussion.
Thank you so much.
Thank you.
Thank you, sir.
Thank you. Thank you so much.
Thank you so much. Yeah.
Thank you. Thank you.
Thank you. Yeah.
Thank you.